and I had outstanding parking tickets. So glad I said that.
Okay, it is 9:30 in the morning on Tuesday, February 22nd, 2022. As Commissioner Mears pointed out, 2/22/22. Tuesday. Wow.
In the awesome Marilyn John's birthday.
Oh, so what are we gonna make her today?
Days for
65?
birthday. Oh,
Happy-
wow. No.
So that's fine.
Let's go younger.
That's not how we roll here. So we are joined by a whole host of people. We have Commissioner Banks, Commissioner Mears, our clerk Stacy Crawl, our Sonny and Cher on the line.
Alan Carl. We're on.
Joined by Alan Carl, our media friends, our intelligent county administrator, Andrew Keller, and I'm going to let the chamber staff introduce themselves here. Some of you have been here, some of you haven't, so go ahead.
All right. Well, you know me, Jody Perry, President and CEO.
I'm Sandy Messner, Director of Marketing and Communications.
Jessica Gribben, Economic Development Liaison to Shelby in Northern Richland County.
Eric Thomas, Director of Economic Development.
Clint Knight, Director of Workforce Development.
Welcome, chamber. Do you have a favorite chamber coworker yet, Ms. Messamore? Do you have a favorite? You can say.
All of them.
Oh,
Diplomat there.
oh.
Except Barrett.
Okay, there you go.
Now
So-
you're Tony's friend.
So we had, the county taxpayers, not we as commissioners, had committed $100,000, hopefully in a continued manner, to the Richland Area Chamber and Richland County Develop Group for a direct investment in economic development. And so we've had some conversations with the chamber on, hey, how can we set up something? And I know we scheduled it for quarterly. I think we'll talk about moving that to more of a 6-month basis, and you can explain that. How can the taxpayers know that they are getting a return on their investment? So we had some conversations last week with the Economic Development Group producing some numbers, and it's malleable right now. It could maybe change as we move forward, just to say, hey, here's what we're doing. Here's how there's a return on your investment, your $100,000 investment, Richland County taxpayers. And then we'll kind of go from there. So Jody, Barrett, anyone, you want to take it from here and kind of go over the numbers and your thoughts?
Sure. So I'll set up and then I'll kind of go round robin a little bit here this morning. So we were here, I think it was in November, if memory serves right. It was around my birthday, I think. And kind of kicked things off. That day it was Barrett and myself, and a lot of the conversation tilted towards workforce. And so we said, hey, next time we'll bring the whole team with us so that we can all give you a little bit of a taste. We have since added to our team. So you met Sandy Messner. She joined us the middle of December as our Director of Marketing and Communications. So you all know Angie Finello. Angie is still with us. She's works for us part-time, does amazing work on all of our event programming, our marketing, our website, and the printed materials that we produce for the most part. But we knew there was a need, especially on the side of economic development and workforce development. Of course, we're all working on branding and other things that we want to be able to do from a larger marketing perspective. So we had need and some need of capacity. So Sandy has joined us. She came most recently from Gorman Rupp and has been doing a phenomenal job. Her first assignment, I was like, hey, we need an annual report. So she pulled that out for us. So I
Snatched her from Gorman?
did.
Wow.
So thank you to Gorman. But yes, so the report actually has, obviously it goes over more than just economic development and workforce development. It has kind of encompasses all of our work, but we're glad to have her on board. This year, as you're going to hear from each staff member, they all have a couple updates they want to share, as well as the metrics. It's a busy year already, much like when we were here last time. Economic development is booming, and we are working our best to make sure that Richland County is positioned as well as possible to take as much of that in as possible and really help us grow during this whole decade. And so, there's a lot happening in the world, obviously. We can't answer for all of that, but we're trying to do the best that we can for our corner of the world. And I can tell you it's busy. So Barrett, you want to touch on the metrics and then we'll go from there?
Sure. So what you have in front of you is the kind of semi-annual breakdown of the metrics. So 93 visits to unique businesses. We've responded to 30 attraction opportunities. So those are opportunities that we have a good fit for in this county to bid for a company that's coming in that doesn't have a presence here at all. They're looking for a new location, and Richland County has a good opportunity for them. We closed 9 projects. You can see more of those closed in the first half of the year than the second half of the year. And that's there's a magic time when a project is closed. And as we kind of work through the process, a lot of the work is happening in January and June to get projects closed in the second half of the year. And we did a lot of work in the second half of the year for projects that will end up closing in 22. So, there's highs and lows in the metrics. That doesn't really reflect activity or effort. That's just as projects close, and they close when all the parties get together and agree on a deal. Sometimes it takes longer than expected. All in all, 133 new jobs committed. So those may not all be hired. The company had several years to make those hiring commitments, but they've committed to hiring 133 new jobs, more than $5 million in new payroll, $23 million in total CapEx. And that CapEx number is, so capital expenditures, companies investing here locally, that is only associated with these 9 projects. We've got companies investing all the time, millions of dollars. There are some companies that I know are investing multiple millions of dollars every single year, but they're not an economic development project. I don't have those metrics, and they're not included here. So there's a lot more business investment happening in the county. We've got 23 million associated with these 9 projects. The bottom line there is the active project. That number went up from the end of June to the end of December, and it's up even more now. So the last time I counted, it was 28 active projects. That is like an unbelievable number. So we are running around trying to make all the things happen. A lot of activity.
Darren, if I can ask, why are the output metrics so heavily weighted in the first half of the year?
It's just when the projects close. We've got big projects that I would have expected to close and be included in the second half of the year numbers that for reasons didn't close and should close in the next 2 weeks and will be included in this next round of first half of 22 metrics.
So one of the things we talked about last week was, obviously we're in a public meeting, there's a public expenditure, but we talked about transparency while also not jeopardizing projects that have come across your desk, right? So I'm wondering if you could expound upon that. We want to be as transparent as possible for the public, but at the same time, we know there are some private business ventures where they reach out and say, hey, this is very private, this is confidential, we have an interest in Richland County. So how would we go about so the public can understand things are going on without jeopardizing that potential project? And I know that's a tough question.
So I guess a lot of our work comes up front, and at that point, all those projects are confidential. Eventually, they become public. And Jobs Ohio does a good job of publishing data on their website. So you'll see what companies expanded, what their commitment numbers were in terms of jobs, payroll, CapEx, and what incentives they got. And I guess the problem our team has had is that we're working on these projects, and by the time they close, I've been working on 28 other projects, and we haven't been good at telling the story. And that's why Sandy is here. That's to give us more storytelling capacity when something becomes publicly available and it's 6 months after I've been working on it, and I've been working on, 40 other projects in the meantime, we'll have some storytelling capacity that will illuminate what happened.
So another question, again, I know some of this is repeat for Andrew, us who are there, but that way Daryl and Cliff can hear. One of the things we talked about was also, what do we in Richland County do well in terms of economic development, and what don't we do well at? And then there'll be a follow-up as to how we fix that. So one of the things Andrew and I asked is, okay, where are we excelling? And then we'll use the Intel plant as the example, because that's out there right now, the chip plant. 5 million gallons of water a day, by the way, is a requirement for that plant.
Drain the cliff.
It might drain. Yeah. So what do we do well? And what don't we do well that is hurting us in the economic development sector?
So I guess things that I've been told it's tough for me to answer because this is what I do, but from outside sources, I think things that we've been told that we do well are running projects and keeping the site database current. So we've got a database of all the sites, land, and buildings that are available for these projects that we're talking about. And I think we do that pretty well. I think we've got good marketing, good data in the database, good marketing. Jessica's been putting together some of the videos that we've had so far, the drone footage, all those things that kind of describe the property well. And Jobs Ohio is getting more and more interested in kind of doubling down on that site development piece and knowing all the things that we have and how can we be as ready as possible to respond to these projects. So the fact that we've responded to 30 attraction projects that fit Richland County is a testament to the preparedness that we have to go and do that.
And I would just add, when we say respond to a project, they'll send the Jobs Ohio and site consultants will send a Excel spreadsheet, which is a request for information that is really long and detailed, that, for every property you want to submit, you have to know, the water availability, the different utilities that are running to it. Is it annexed into a city? All of these things. And so these guys have figured that out for properties. And then also they're on the lookout and in process of bringing new properties to the table. Because to your point, for the Intel system, we don't have a mega, that would be called a mega site. Intel, I think, was requesting 1,200 acres. And by the way, there was not a 1,200 acre site in all of Northeast Ohio. So it was not just that we didn't have one, but nobody in Team Neo's footprint had one. So we do, however, have one of their largest sites. And so large site work is something that, we're continuing to focus on and improve upon. But, those site requests, they take a ton of time, and you send them off, and I think we're increasing the amount of at-bats that we get beyond just sending those RFIs back. That would mean, actually being able to talk to the site consultant, because really how this works is it's an elimination game. The site consultant will get 50 sites and they want to get it down to, they want to get it down to 4 that they can take the client. So
Did Ohio drill down to for that Intel plant? Like I said, 1,200 acres is
yeah.
So it's probably 3,200 acres.
3,200.
It is. So I just talked to Michael in New Albany. It is a gargantuan project. They've got a lot of money behind the company going out, doing negotiations, acquiring land.
I think it was the only Ohio site. If I'm not mistaken, I think it was the only Ohio site that they pitched. Because I think it was, well, I just know that based off of that.
Are you letting out secret information?
No, there was a Dispatch article that talked about it. So,
And I'm not sure that went through the normal request for information process because of the size and scope.
Just sort of phone
Another
call it.
thing I think we do really well, that kind of fits hand in hand with that, is the collaboration with our public partners. So we don't always have all the information, but we have all the connections to make phone calls and get that information when we need it. So I think we've worked hard to develop those relationships, and I think they're good. So that's some of our counterparts in other places have challenges there, and we are thankful that we don't.
And the last thing I would say that we do especially well is workforce and building pipelines of talent. So, Clint's been working on that. And as I talk to my counterparts, we've got better solutions for that than other places.
Clint, you want to pitch the Career Institute?
Sure. As Barrett mentioned, we're working to create seamless talent pipelines in the county. How do we not only develop the talent that we have here, those that are working, how do we upskill them? We're working very closely with Job and Family Services and the Area 10 Workforce Development Board to offer opportunities for adults to learn new skills and gain new jobs and earn higher wages, and employers to upskill the employees that they have in the building. So that's one major strategy is when it comes to retention. So we want to retain the talent we have by hiring or not hiring, but elevating their skill level and elevating their pay so that they're meeting the needs of the employers. The Career Institute that you mentioned is another strategy that we work towards in workforce development, where we are trying to ensure that our young people understand what types of careers are available to them right here in Richland County. We're working to develop ongoing partnerships between business and education to give young people the opportunity to get in to a business. The Career Institute specifically, a couple of pilot programs that we're running right now, where a group of students will go in and work on a project on site. The employer will identify a problem that they have, and the students go through a solution process. They learn about the business, they learn about the nature of the problem, learn about the need, and then they go back to their classroom and work through a business process and come back to the company with a solution. So that way they're there, they're seeing it, they're understanding what the company is, what the company does, what the careers are in the company, and they're learning some of those soft skills and some of those business skills through that project. So that is the concept of the Career Institute. We're looking to grow the Career Institute so that it's not only that hands-on workplace experience, but it's also a connection point for internships, for summer work opportunities, and for pre-apprenticeships and apprenticeships. So the Career Institute, the idea of a Career Institute is a connection point. We've spent a lot of time over the last couple of years putting some mechanisms in place that will support that. One of those being Community Opportunity, which is a website, communityopportunity.com, that showcases Crawford, Wyandotte, and Richland counties. And it's a job board. You can filter on Community Opportunity by what county you want to look at and by what career you want to look at. That is a hub for students. They can go in and create a profile that's not public facing, and they can do research on what's available to them. So that was one of the mechanisms that was put in place so that we have the data to know what young people are interested in. And we're working to build this so that it's a bigger project, but we've run 3 pilot programs so far with 3 companies, 2 pilots so far, 1 coming up here in the next couple of weeks. And we're continuing to bring all the partners together, as Jessica mentioned, the collaborators with the Mid Ohio Educational Service Center, Job Family Services, Workforce, the Area 10 Workforce Development Board, and multiple companies. In the past, MTD Shelby has been a part of it. Major Metals has been a part of it. Adina is going to be a part of it here in a couple of weeks. Madison, Comprehensive High School, and Lexington. So we're working to grow the Career Institute so that we can expose young people what's available to them right here. So that's a long-term, large-scale effort that we're looking to build.
Let's flip the tables a second and use a sports analogy. When in the football world, they use self-scouting, right? So if we were to self-scout ourselves in Richland County to see what we're not doing well in terms of development, economic development, And I understand, Barrett, what we're asking, because so we'll not let you answer, Barrett, because you're sort of like, well, then I'd be talking against myself. So you don't have to answer this question. What can we do better? And then how can we three help you guys? We want this to be more than just 100,000 contribution and go do our work. That's not, it's a partnership. So what can we do better? And then how can the three of us help that?
I think that, the things that we're trying to improve upon are similar to things that everyone is trying to improve upon right now. There is a shortage of sites and buildings. Adina built the spec building out at Airport West. It's getting a lot of looks, and we do hope and expect it will be filled before, too long. But when that is off the table, then there's not a lot of, beautiful state of the art manufacturing facilities just sitting there waiting. And so, site development, both in terms of greenfield sites as well as building, is something that, we're trying to really push. I don't know that I describe it as we're not doing well. It's just that there's just not a lot of them. And again, it's something that everyone is wrestling with right now. And, again, with the larger changes that are happening in the world with supply chain, right? We're all go to Kroger or anywhere, there's just a challenge right now. And there is an enormous amount of interest right now from manufacturing companies, both foreign and domestic, that are looking to just locate nearer to their customers. And so it's a huge opportunity. I think, like we talked about last week, one of the big ways I think you can help us is by opening doors. So, when we're needing to contact landowners or contact people that may be interested in, building a spec building or looking at the community, I do think there's an important role that you play as our elected officials, our community's leaders. And oftentimes you just know people in the community that we may not, and you can make that call and get us on the phone with them. That's the big thing. I don't know what you guys would add to, what I said, or in terms of other ideas that you think that would be helpful.
I think it is connections. Going back to the Intel opportunity, they have a war chest of millions of dollars to go make acquisitions and make things happen. And that's something that, to my knowledge, we don't have. If we do, let me know.
Errol?
That would make a difference in acquiring land, putting together sites to bid for opportunities.
I would say too that, something that you're doing that I would say, please keep doing, and I don't think that you wouldn't, is you're so supportive of economic development. And I'm not talking about the funding that you give, but just you operate from a pro-business mindset and you want to see the community expand. And so I can tell you, we can all tell you, we have colleagues that work in communities where that is not the case. And so it takes a lot of effort to get projects going. And I don't, that's something where I feel like with all of our municipalities, with the county, we can pick up the phone and you're already starting with like, okay, we want to make this happen. We're not trying to stop things. And so I think, just continuing on that path is extremely helpful and makes a difference.
And then the last piece we talked about was maybe adding each time they come up a specific site where we believe there is potential for development. So something we talked about at length last week, which makes the most sense, is the airport, right? You have the cyber wing coming in from the government, plus the private investment, substantial private investment that's going in out there. So our thoughts were when they come back again in 6 months, to the best, without, again, letting anything out of the bag that would impact or hinder economic development. Can maybe someone update us on what's going on at the airport, some thoughts? Because I always say money follows tech, and there's some real growth out there. So if someone wants to maybe answer that.
Yeah, I think the idea of site or a theme, kind of like a specific topic. And, we're open to, if you're getting a lot of questions about a particular topic, with, obviously give us a heads up, but, we can be prepared to talk about that and share. The airport is, and we'll talk about that much more next time, but, we gave an award the other night to Miss Aviation for their incredible investment out there. That has really jump-started. Obviously, the cyber wing that you mentioned, that's a huge step forward as well. And if people haven't driven out by the airport in the last 3 months, they should definitely do it, because there is a giant, there's a giant new hangar there. There's a lot of changes taking place. We are going to have our after hours there in May. So I invite you all to attend, and you'll kind of see some of that firsthand on site. But, if you don't work out there, most chances are most Richland County residents have not been near the airport in a while. And on your Sunday drive or next time, just drive out there. You'll be really impressed with what you see.
And there's a new company out there. Aerotrek is a new flight school that is opened their third location in Mansfield, and it's now their largest location. They've got 9 planes here, 3 full-time flight instructors, and they are maxed out on capacity. So
Well, Gribben's going to get her pilot's license, right?
we've got students from Kent State and Ohio State that are getting their private pilot's license here and then going back to those programs to get instrument ratings, a commercial pilot's license, so that we are feeding the talent pipeline for pilots out of this community.
I think the
Those
more we grow, the more important that airport's going to be.
Sure.
Before we turn it over to
I'll just make a comment, but why, one of the reasons I've always backed economic development, as far as in politics. I had an experience as mayor that Avita, the hospital, there's no doctors in Belleville, so I worked very hard to bring them there. And I was at a debate. 3 of us was up front. One politician kept saying, you can't support economic development. The government can't help that, can't do that, blah, blah, blah. I happened to have a newspaper that was dated the date of the debate that said, Avita coming to Belleville. So I truly believe economic development and government should mesh and work together. And with your help, I think, or with our help, you've been able to do it better than you would do it without our help. And we appreciate what you're doing.
Al, Carl.
Okay, thank you very much. Good morning, everybody. Jody, I'll ask this of you, and if you want to toss it to your staff, that's fine. The 100,000, I've heard everything that's going on, but if you did not have that $100,000 that the commissioners gave for direct economic development, what would you not be doing that you are able to do today because of that taxpayer money?
Well, I mean, it's directly funding all of our work in the R&E and attraction space. I mean, that's funding a person at the end of the day, more than a person, but I mean, that's we'd have less capacity. And so it's very crucial and very key to what we do and to be able to continue what we're doing.
And when going back up, scrolling through my notes here, please bear with me. And Barrett, I want to make sure I get the numbers right. In 2021, you said 30 attraction visits or opportunities that you guys participated in.
Right, we responded to 30 attraction opportunities that fit space that we have here in Richland County.
And I closed 9 projects, 133 new jobs committed as part of those 9 projects, $5 million in payroll, $23 million in capital expenditures. I'm just going over the numbers to make sure that I was hearing them right.
Yes.
I'll let Al go for a second. I'll come back to you.
Al has a touch screen and his fingers don't always work.
Al.
Greg. Al's not, he's still muted.
We shocked him into silence.
Greg.
I may grab you in the hallway for a
Okay.
TV interview or something.
Jody loves camera time. Her nickname's Red Light Jody. She knows that's not true. Oh, inside.
Better explain that. Let's see, you explain that.
Someone else has that distinction, not our community, not our community. So
The different meeting.
Carl.
The projects that you're talking about, Barrett, Jody, does that include the recent decision by the stamping facility that's going to open a new facility on the north end? Is that part of that, or would that go toward this year's?
The one that just went to city council. What is it? Yeah.
Oh, no, that's not in these metrics.
That would be this year.
That's a 22 project.
careful, Carl.
Careful for what? It's already a done
It's
deal. I
public.
just did.
Yeah.
I
No,
wrote
that
about
was
it.
at Stock-
I know, but
Yeah,
I
but
wrote
that,
about it.
that went to city council this year. So
Yeah.
that's something that will be in this year's metrics.
Okay, I'm just Tony.
Barrett's
If I
saving that for the second 6-month report out.
I'm just saying, if I could get you to read my stories, I had that a month ago, but that's okay, Tony. You'll catch up.
I read all your stories, Carl. I have a notification for Carl Hunnell stories.
Yeah. Jessica, if you could talk about your role, you probably got to talk less than anybody so far today about your role in the northern part of the county and what you're seeing these days.
Sure. So my role is a great example of our public-private partnerships. It was kind of developed through the Shelby CIC, a partnership with the city of Shelby and the Shelby Foundation. Came together and they wanted specific focus for economic development on Shelby in the northern part of the county. And so they partnered with the Chamber in Economic Development, who was already doing that work and doing it well. And that's where my role came from. I do a lot of the things, similar things to what Barrett does. In fact, we work together on a lot of larger projects, but I also get to focus some of my time on the Main Street, smaller businesses that they felt were kind of falling through the cracks. So I get to bring resources to them as well. So it's a little bit of a hybrid. And I work mostly in Shelby, although I do get to spend some time here with the team, and we all work together really well.
And that's because she's going to get plenty of time on Thursday, Carl. So she's coming back.
One question I had, everybody's been talking about Intel coming into the area. Getting back to what Tony was saying about, the transparency and things you can and can't say. Are you currently working on anything related? Because I know a lot of the talk about Intel is, well, not only is Intel going to open, but it's going to bring, suppliers and all that kind of stuff. Are you working on anything related to Intel?
So I guess this is similar to when Altium Cells opened in Northeast Ohio. That's kind of the big fish that then has lots of suppliers. Those companies want to be close to Altium, but not in the labor sheds. They don't want to be too close. So we expect that same style of RFI and a lot of them to come out once Intel gets things cooking. I mean, there's not solid enough plans for those suppliers to make requests and start making their plans yet. So, but yes, I expect that to happen in the future.
And we have had
Go ahead.
conversation with Jobs Ohio specifically regarding that. How do we prepare our companies that it currently exists to be suppliers as well if they fit that bill? So that conversation has definitely happened.
Okay, that was going to be my next question is, what are you doing to prepare for it? That's all I had. Thank you.
That it?
Just one more, if I could. Someone had mentioned earlier, I think it was Tony, when he said 5 million gallons of water for Intel that they're going to need on a daily basis. Jody, Bear, what are you guys seeing in terms of, I know there's a finite amount of space, but in terms of infrastructure, what are companies looking for in terms of water supply, power supply, anything that's not people related specifically, and how well are we set up to accommodate those kinds of needs and requests?
So the Mansfield water plant has about 12 or 13 million gallons of excess capacity, so we're in really good shape there. The pipe work that we have laid under the ground, the city of Mansfield, has laid under the ground to the Arrow site and Airport West will hold 2.2 million gallons of water a day, 1.6 million gallons of wastewater a day. That is a lot of capacity. That will serve nearly everyone that goes there, but we get projects where companies are looking for 20,000 square feet of space and companies are looking for 2,000 acres to build giant projects on. So, I mean, the range of projects I see is all over the place. And I guess the capacities we have fit with most of the projects. The capacities that exclude us from projects, we can often get transmission level electric to a site. It takes time and money, but that can happen. Changing the gas lines and doing betterment there to drastically increase the gas size, that's difficult. That's all buried underground. I've had quotes of $25 million to increase the infrastructure to make a site fit a project. So that excludes us from projects like that. But for the most part, we've got pretty good infrastructure in place that's going to meet the majority of the projects. And then often the next thing we would do is bring in transmission level electric.
Nothing's impossible. It's just a question of cost and benefit analysis. And, for a company like Intel, their pockets run a little deeper than I would say most 99% of the businesses that we're working with. So, but I think we have a really, good, strong sell for those, mid-size manufacturing and distribution companies. We've got a great workforce, all the utility work that Barrett said, and not just in Mansfield, but in other places throughout the county. So, I think we've got a good sell for that. And, these guys are really out doing that every day for the community.
And as we said last week, Carl, we don't say no. If we have an opportunity, we'll figure out how to make it work. It is a good thing with our economic development team is there's no no's in this group. It's okay. How do we make it happen? So that was the crux of the conversation. And if we have an opportunity, we'll figure out how to make it work.
And I will say the only thing I was going to add to your first question about what do we do well, I think something that these guys in particular do well is the follow-up, and I would call it dogged determination to get the most possible for the business, particularly for the expansion projects. The businesses that are already here, they work really hard to get as much as possible from the state to help them. And again, not every community has that, and they're doing a great job.
Maybe the next time you come, we can get one of Barrett's buddies from Jobs Ohio to tag along. Would you think they'd do that?
Possible.
Yeah, I didn't answer that question. So
Can't answer for other people.
I want to thank you guys so much. This is a good start to the partnership. And we will continue on and have you report out in 6 months. And I'm sure before the day's over, I'll talk to one or many of you anyways, just in the normal course of business. So thanks a lot, guys.
We'll talk about
Hey,
that.
I did have one other question.
I'm in trouble.
Everybody's been talking about, mega projects that are coming across. Are you getting any smaller projects looking into the area? The reason why I ask is because, it's always emphasized that sometimes the small businesses are good because they have that potential to grow.
Al, that is a great question. Thank you for bringing that up. So mega projects make up a super tiny portion of the total number of projects, even statewide. So Ohio just passed their mega project legislation. Before that, we didn't have any. 80% of the metrics in this county and statewide all come from existing companies in our communities expanding. The 20% of attraction projects, most of those are normal sized projects. The Intel deal is the largest project the state of Ohio has ever done. So yes, nearly all the metrics of economic success are driven from companies that are here expanding and doubling down on this community.
Which we have seen.
A lot of.
Especially recently.
All of these metrics are from existing companies. So sometimes we get new companies moving in. Sometimes the state gets new companies moving in. But most of those metrics are very normal sized projects, and even the attraction projects are kind of reasonably sized.
And keep in mind too, these metrics, these are the ones that are driven by the agreements and the deals. But, you know, again, the other night we gave an award to Edge Plastics, and, you know, I think they had committed 40 jobs to their deal. And they announced they're already over 120 new jobs. So, you know, they've been able to add far beyond what they had committed to. So I think those kind of stories also don't always get the headlines. Sometimes you hear the ones that don't meet it, but we've been lucky. We've got some great businesses here that are doing good work.
Yeah, it's great. Go do your interviews. Oh, thank you guys. Well, we have about 5 minutes. We can get through our logistical items. Motion to certify the record of proceedings for February 17th, 2022.
So moved.
Commissioner Barrow,
Yes.
Mears,
Yes.
Commissioner Banks.
Yeah. Motion to approve requisition.
Second.
Second.
Barrow,
Yes.
Commissioner Mears,
Yes.
Commissioner Banks.
Yes. Okay, finally got a quote for signage at Longview. It's from Spider Signs and Graphics Incorporated for $27,000, 650 cents. I think if we have a motion to do this, we'll need to determine where we'll pay that out of. I would recommend capital projects. That's exactly what this is. So unless one of you disagree, I'll ask for that motion.
So moved, and I agree with that line item.
Second.
Commissioner Barrow,
Yes. Or abstain, sorry.
Commissioner Mears,
Yes.
Commissioner Banks.
Yes.
Okay, and then,
Tony, what does that contract involve? Does that include design or just construction or what?
the design is done, Al. There's going to be some changes out there. I have the pictures, if you wish, of the current signage out there, which is not in good condition. So we're gonna be installing a new tenant panel sign. Basically, we're gonna be installing 6 new signs and or what you might consider a sign. We're going to have some directional signs to the Board of Elections because that's probably our most traveled government entity out there. Then we'll put an actual sign above the door noting the Board of Elections entrance. You'll see an address block go up. So when people know the address, they can see it easily on the building. And then you'll actually see a Richland County logo above that cement, what we'll call it canopy, as you walk in. So there'll be 6 new structures or signs, so to speak.
And what was the name of the company again?
Spider, SPYDER Signs and Graphics Incorporated.
Where are they out of?
Mansfield.
Okay, thank you.
And
I know
last,
Bart's getting itchy about this presentation, so.
last but not least, we have the site lease agreement with the Village of Lucas as we move forward with the Marks Tower out there. May we have that motion?
So moved.
Second.
Commissioner Barrow,
Yes.
Commissioner Mears,
Yes.
Commissioner Banks.
Okay, we gotta wait 1 more minute. And then we will recess our regular meeting. Alexander, how we doing?
All right.
Okay,
We've done better.
Yeah, I know.
And we're gonna do better.
We're gonna get a guarantee on the record here. So at 10:15,
Can we approach the bench here?
now we got a little recess.
Give you our paperwork.
We'll recess our commissioners meeting. And now, Bart, I think you're the chair of the investment advisory committee.
I am.
You want to?
Thank you. Bring the meeting to,
Sign that clip. I'll keep them together.
Fine. Yep.
ready to go. It's February 2nd. This 2/22/22.
Mhm.
That's called a what? Para-
And it's former Commissioner John, now State Representative John's birthday today. She turns 85.
Another little thing for the record that we. That's dog years, right? Okay.
Nope.
Bring the meeting to order. This is for our fourth quarter of 2021. And we summarize this. We had a goal of 800,000, made 751.85.87. So we're a little short. If the Fed would have just raised rates like I wanted them to last year, made it. Or like I thought they would.
Probably coming.
Now, he's always told me never try to time the market, and I didn't listen. But
I'm in the market. It's better than timing in the market.
there you go.
That's what investment guys say because they make money off your investment.
That's right. He's always told me that. I didn't listen. So, but anyway, we were a little short.
So does that mean you serve a penalty like Juwan Howard, a 5-day suspension or anything
I
like that?
think I get traded to the team to go to the Super Bowl. Is what happens. Anyway, Tim McCourt here from Peter is going to give us a kind of what the future's going to be. What our plans.
We'll see. Yeah, we can plan. Yeah.
This is what our plans going to be.
Thank you, Treasurer. And it certainly has been a change in sentiment since I was here. I think it was 6 months ago or so, but especially just recently, the outlook of what the Fed is likely to do here in the coming months and over the next year or so. I've got a presentation of a market review, expectations of what interest rates are likely to, or what they look like now, what we're likely to see over the coming year or so, and how that impacts the county's investment portfolio and the strategy. When you look at this page on the Federal Reserve outlook here, which is what they widely known as their dot plot, it's their forward guidance or their communication of their expectations to the marketplace. And they only release this every other Fed meeting. So this one we're looking at, and this is the most recent one, is still from their December meeting. They'll release it again when they meet again in March, in mid-March coming up here. But even from December, this was quite a change versus what they had been previously conveying to the markets. And they had announced there was 2 steps in the process. Part of their accommodative policy or being so accommodative to the markets has been, one, since the start of the pandemic, they cut short-term rates to the target range of 0 to 0.25%. So we're going on 2 years that we've been at 0% interest rates. And they also re-implemented their quantitative easing program, where they were buying $120 billion in securities out of the marketplace each month in order to inject liquidity into the economy, keep the flow of funds moving throughout the economy, and also help keep rates low across the curve. So the first step of tightening policy or pulling back was going to be to slow down that bond purchase program. In November, they announced that they were going to start doing that, which was likely at that time not going to end until mid-2022. Then in December, they announced they were going to speed up the process of that slowdown of that asset purchase program. So there's some debate why they're even still doing it at all, but they are still doing it to this point, and that's likely now going to be ending by next month in March.
So basically, what you're saying is they're going to stop pumping money into the market.
Stop pumping into the market, and that's the first step. It's slowing down the pump into the market, and then after that, start to raise short-term rates. So once we get that asset purchase program completed by next month, that's when the market is now expecting them to start raising short-term rates.
Raising short-term rates greatly or minimally?
Well, that's the debate right now is whether we get a 25 basis point or a 50 basis point hike in this first meeting in March. But really, I think more relevant than that is whether they do 25 or 50 at once is going to be the pace that they do it throughout the year. And when you're looking at this, back in December, I think at that point, it was going to be a lot more gradual than we are now expecting. It was unanimous in December that every Fed member was expecting some rate hike in 2022. And that was the first time they had even gotten to that point. Well, previous to that, the debate was going to be whether we get into 2023 before we start raising rates. Now everybody was in 2022. But even since this December meeting, the market expectations are really going to be that we're going to pull those rate hikes forward to where there's now the market's 5-6 rate hikes this year. So we're looking at probably 1.5% in short-term rates over the course of the year. Now we'll see if that's all front loaded, whether they do 50 basis points in March or whether they just do it 25 basis points per meeting. I think it's probably still more likely that we'll see 25 basis points and then see how the market and the economy reacts at every meeting, and then see whether it's sequential, whether they keep doing it at every meeting or whether they take a pause or not. But I think we're probably likely to see 25. But even if we see 50 at the first one, they'll see how the market reacts, see what kind of economic data we get, and then see how much they can continue doing that. It's really been such a dramatic shift, though. From my view, the Fed was so dovish for a long time of trying to be accommodative, and now the speak has changed so much that I'm not sure if they're going to be able to go to the extent they're talking about right now. With getting this, if you look at this the dot plot here, they have rates getting up to that 2.5% range during the cycle. The market is still not buying, even though the market is pricing in sooner rate hikes. The market's not buying that they can get that high during this cycle. They're more like 175 is where they think this short-term rate will top out before they're essentially cutting off the economic recovery. Then we need to raise rates to control inflation right now, but at the risk of that is when you start cutting off the economic recovery. Then there's once you get rates too high, that starts to slow down recovery that's in place.
It sounds like, if I'm hearing you right, that's a whole lot of volatility.
There's certainly been volatility to start off the year. You see that in the stock market. Stock markets do not like increasing interest.
A lot of reds lately. I can tell you that. I check my Apple phone every day, and I just see a lot of reds.
We've seen some bounce back, but volatility, like you said, overall, we're certainly lower to start the year, and stocks don't like higher interest rates. So there is some. I think the Fed it's going to be a delicate line they have to walk here in order to not shut off the recovery, and in order to keep the stock market happy. There's a political aspect to it too, that they don't want everybody in a negative stock market there. So, but the more pressing issue is certainly controlling inflation, which has been running rampant for several months now. And they've been forced to back off their transitory argument, which they had been trying to walk that line for a while, get rid of that language. They're acknowledging inflation is here, at least in the short term. So they need to do something about it now. So that's going to be the impetus for the immediate rate hikes. But then how far they can go beyond that, I think still remains to be seen. If you look at the next page, though, the market is fully pricing in these 7 rate hikes right now. What we're looking at on this is this green graph is really what you would earn just by rolling Fed funds futures, if those futures turn out to be the correct model of how they do raise rates, versus what you would earn by buying those specific maturities with those orange dots there. So what that's showing is that the market, you can earn that by buying those maturities, and that's fully priced into the marketplace. And like I said, if it ends up being that we're a little bit aggressive on the outlook right now and they aren't able to raise rates that fast, you'd be better off by buying where they're priced in now and just locking those yields into place and earning what is available in the market. Because we have seen a significant increase in market yields over the last couple of months in the expectation here that Fed rate hikes are coming. So the market is already pricing in those rate hikes, and we can now get much better rates available in bonds than we have been able to for the last couple of years. The two main things of what's driving the Fed policy are their dual mandate from Congress to promote full employment, and then also for price stability as measured by inflation. So when we're looking at the employment side of it here, we have seen a dramatic recovery, I guess you would say, from when we topped out at 15% headline unemployment rate in April-ish of 2020 when the economy shut down. And we've been on a recovery since then. The headline unemployment rate has been dropping steadily to the point where it's now at 4% again. And typically 4% is seen to be the Fed's target of where they would deem to be an economy that's at full employment. 4% is a comfortable number for them. So from that aspect, you would say that they've met their goal there. The one caveat to that this time is that we are still about 3 million jobs short of where we were pre-pandemic, total payrolls in the country. So when you say, how are we at that 4% target unemployment, but still 3%, still 3 million jobs short? It's because the actual labor participation rate is lower. We have less people in the labor force right now. So that's really remains to be seen whether they end up coming back into the job market or not. You're only counted in the unemployment rate if you have a job or if you're looking for the job. If you've just left the labor force, you're not counted there. So whether it's still virus concerns, whether it's childcare concerns, whether it's early retirement, whether it's a number of other issues that are out there, the question there is whether those workers come back into the economy. Because even though we're in a relatively tight labor market, whereas everybody's looking to hire right now, and if you want a job, you can generally get one. If we don't have the number of workers in the country, that the ability to produce is declined. So I think that the ability to grow as an economy is lessened if we don't get these workers back into the labor force. So I think that's part of the hang up right now for the Fed. But overall, the headline number, they're back at that 4% target level. When you go to the next page, though, the inflation or the price stability part of their dual mandate, that's really what's driving the conversation right now. For so long, they were accommodative or kept rates low to try to drive inflation up for their 2% target. We were stubbornly below 2% for so long. They were trying to drive demand by having interest rates low. Like we said, back in April of last year was when we started to cross that 2% threshold. That's when the Fed started that transitory argument, saying we were coming off the low baselines of the spring and summer of COVID, 2020. And so we were going to see that natural bounce in inflation. They expected that to drop back into more normalized levels. As the year went on, though, at the end of 2021, the pressure just persisted. So, like I said, they were forced to drop the transitory argument, even though I think long-term, the market is not necessarily buying this amount of inflationary pressure. There's no doubt it's here right now. They need to do something about it now. And that's what's going to drive these imminent rate hikes that are coming here over the next couple of months. When you look at this chart, you can see just dramatically, this is the CPI Index. The Fed usually uses PCE, but they're very similar in what they're measuring. You can see just in the last year or so how much inflation has bounced here up to
Jim.
Yeah.
The economic people, you obviously understand more than I do. But everyone keeps talking about a fear of a 2009, 2010 economic situation. I'm not an expert, but I know enough to say there are some indicators from where a normal consumer or a normal person in this country sits. We have unprecedented inflation combined with a time where interest rates to purchase homes are really low. So you saw a lot of people refinancing or going out and buying larger homes that maybe they can afford, combining with a hot market. Well, sooner or later, that labor market and the increased wages is going to stop, and people are going to have bigger homes and banks that seem to be quite willing again to give mortgages out. So talk Jane Smith off the ledge to say a 2009, 2010 situation. Because if you look at it, I see indicators that are going, I don't feel so good about the market.
I totally agree with you. And what's interesting is when the Fed was so accommodative coming out of that crisis, they had rates low for 7 years, and they were pumping money into the economy then too. But we never saw the inflation spike coming out of the 08-09 crisis like we have right now. And so while the inflation numbers argue for higher rates in order to slow inflation, you're onto something there that we've seen such a dramatic increase in home values and people potentially buying more than they're able to. And then if you get rates going too high, that potentially leads to another housing crisis then, where you have people that can't afford their mortgages. You have home values that can't sustain themselves as you get another round of buyers coming in at higher interest rates. Because if you look at just how much a percentage or 2 percentage points means on what you can afford on a mortgage, I think that's really going to it's going to, and like we're talking about how the Fed needs to walk this line very closely here. I think if they start to raise rates too much too fast, potentially housing is going to be one of the main factors that starts to kill the recovery then, and potentially sends us back in the other direction. So if they don't want to cause a recession too quick, they're going to need to be a little bit delicate on how fast they can raise rates.
So this is where you say, hey, Mr. Commissioner, you stick to politics and public service and we'll stick to the economy. So the reverse is tell me where, make us feel better, because I'm sorry, I'm going, you know, I have a kid in college funds and I want there to be money in there in a couple years. So tell me where I do. I mean, and if you know the kid, I'm not sure. I mean, your future
It's,
has, I mean, military school tuition,
Yeah.
but so tell me where this won't be 2009, 2010, because I'm looking at it saying from what I know and what I remember, I don't feel so warm and fuzzy. So tell me why it won't be.
I mean, it's tough to say. You know, corporate profits have still been relatively strong so far. We'll see whether they can, how much they can withstand the higher interest rates. I think there's some degree of confidence that they can, that there's enough demand out there in the economy right now that I think that we're going to be okay. But as far as interest rates and what that means for this portfolio, we still, you know, like I was telling Bart, we're going to, and I'll get into this in a second, we're going to be biasing the portfolio a little bit shorter now, expecting these rates to get higher. But we also want to maintain diversification here, because we don't know when that is going to run out. When the Fed starts raising rates and it turns the economy around and we start to head back in the other direction again. And that's when you don't want to have the portfolio all tied up in short-term investments when we go back to the other direction. So we still think it's important to have diversification for the interest throughout interest rate cycles. Right now, we do expect rates to be rising, so we want to be able to be prepared for that. But we also think that, you know, we're not trying to place too heavy of a bet one way or another on where rates ultimately go. And that's why what you can see here, if you turn the page to one more page in here before I go on to the portfolio, you can see just how high on this Treasury yield curve graph. Short term. Looking at, yes. Look, the three data points here are the end of 2020 on the bottom line, middle blue line, the end of 2021, and then the top line that just a month later at the end of January. And we've even seen this trend continue into February. Just how much on the short end interest rates have increased on these expectations. Again, the Fed has not moved yet at all. The target Fed funds rate is still 0 to 0.25%. So at the very front end, all these lines start from about zero, because that's still where the Fed is. But the market expectation is continuing to price these rate hikes in. And that's why now we're at the end of January, the 2-year was up to 1.20. It's up to 1.5% right now. The 5-year is up to 1.9%. These are huge increases from where we were a year ago as far as what we can buy for the portfolio. So the portfolio has bonds going in now that are earning 3, 4, 5 times what we were buying just several months ago. So that's going to translate into increased investment income for the county.
I'm tracking it, Bart. Let's go. I want to get up to about 3 years ago. We were.
It's going to take a little bit.
When you look at then how this relates to the portfolio, flip a couple more pages here when you get to this page.
Track it.
This shows what the portfolio looked like. I have it updated through the end of January, even though we're doing a fourth quarter meeting here. But just to give you where we stand right now, the cash there is the Star Ohio balance. We're the administrator for Star Ohio, so we include that in there as well. But then the portfolio is at 83.7 million. That's what we're managing. It's custodied at US Bank. So about 105 million total there. Of the 83 million that's invested, though, that's that 2.4-year weighted average maturity. The yield down to about 84 basis points. That's been declining over the last couple of years as we've been reinvesting into this zero interest rate environment. But now that has most likely bottomed out here. That will, like I said, as we're reinvesting into the new environment that we're in, that yield will start to turn around. So that portfolio yield bottomed out in the 80s here, whereas Star Ohio has been down at 8 basis points for the last 2 years. That's the advantage of being in the long-term portfolio, having these assets diversified, as you don't feel quite the extreme effects as you would by being in a cash account. So that portfolio bottoms out here at 84 basis points, starts to turn back the other direction. That maturity distribution there on the bottom is how that 2.4-year weighted average maturity is spread out. You can see you have over, $18 million maturing within the next year, which will go back out into this market now at much higher rates. Bart was saying he's even probably got a few extra million that he could, after collections are over here, that we can put into the portfolio, start buying those rates right now. That will help bump up the yield as well. Overall, though, we'll be reinvesting these right now, relatively in the short term, as we are waiting for, we're seeing the interest rates rise, and we likely will expect that to continue. So we're buying commercial paper investments inside of a year that we're still buying over 1% on right now. Biasing that portfolio, like I said, a little bit shorter than we had been. All of the rest of this will continue to age a little bit. And so then 6 to 9 months down the road, as we're then reinvesting, then we get back out into longer term securities most likely, and keep that diversification in the portfolio then. So I think it's in good shape right now. Right now, it's just letting it age a little bit, staying relatively short term. And then we'll start to build back out longer, maybe later in the year then.
Commercial paper administrator Keller and I start to get shakes, and we start to have PTSD of a certain class that the both of us had to take at some point in our life. Great professor.
We love commercial.
Secure transactions was one of the
I love
main classes. Oh my gosh.
The 21 million in cash right now. I'm going to send 6 to Jim here in probably a week or so, and let him work with that.
Some of that's our ARPA money, right? So don't be.
Some of it's your ARPA money. It's all.
I know, but
we've got a real estate tax collection now. I've got money coming in. It's a little slow, but it's not bad. So as I get that money coming in, that's where I can give Jim some more of this money.
And we've even seen a lot of our county clients investing some of the ARPA money. That, you know, if it's funds just have to be appropriated by the end of 24, spent by the end of 26. So a lot of this is going to take place over the course of a few years. You'll have another round of ARPA funds coming in May, most likely. And so you have cash on hand, especially if there's.
That's why he was elected, for you guys to discuss, and we'll figure it out.
And especially as we're biasing these investments toward the short term, I think there's plenty of room to build that into the portfolio, pick up some yield that's there right now, earn some income on these funds. There was guidance changed at the end of, or in the middle of last year, where income on the ARPA funds can just be sent to the general fund. It doesn't need to be calculated separately any longer. So that's why we're seeing a lot of our clients really mix the ARPA funds into the portfolio then.
You took 5 million as like the law.
10.
You did 10? Okay.
Yes, 10.
Okay. See, the 6 is, in my mind, it's part of that.
Okay. I mean,
if it's not going anywhere.
Yeah, that makes sense.
If you know what I'm saying, it's really not going anywhere. I talked to Daryl the other day about our jail project. That's going to be a project that's going to work its way out over a pretty long period of time. So it's not like you're going to write some huge check, and huge to me is more than $1 million at a time. You're not going to do that. You've got different little milestones of things that you're going to pay for. And I kind of get the same feeling out of ARPA. I don't see you writing just a huge, you're going to go build a building. You're going to go, I don't see that at this point. At least not right now.
The majority of our transactions will probably be under 7 figures.
Right, exactly. So that's going to be a lot. It's going to make this easier to deal with. Not having this, a big check go out at one time, because we always have. Well, I think my 90 days was 6 million.
It's about that. Yeah.
I think I got 6 million these next 180 days. 90, I got that moved.
And that's where our communication is key. If he takes that star balance down to 15 million, and then all of a sudden you get $500,000 blocks going out for these ARPA projects, and he just says, hey, my star balance is down to 11 now. I'd prefer to bump that up to 15. The next 3 or 4 million that we have maturing out of the portfolio, then you can just say, just don't reinvest. I'm going to take that back and send that over to star, bump my liquidity, cushion back up to a comfortable.
Okay. Right.
So I think that's
balancing the portfolio.
Right. It's just the communication. They're meant to work in tandem, the cash portfolio along with the securities portfolio. So you don't want it to be looked at as once you send money into the U.S. bank portfolio that it's gone and can't be touched. We're working with the maturities upcoming. We'll keep that bumping that front end up to probably 25% in the 1 year, another 20% in the 2 year. So we'll have funds always rolling toward maturity, that once that star balance gets lower than the comfort level, we replenish it, build it back up, and you have plenty of liquidity on hand then. So that's how I envision this working.
Yep. Me too.
Good. Last part is just that asset allocation on top. The only thing is that all of these portfolios that we manage used to be more heavily invested in government agencies. As all of the government agencies are getting smaller, Fannie and Freddie are getting smaller by design. They are not as prevalent as issuing bonds now. So we are buying less of them, and we're looking more for other eligible asset classes, either whether that's going back into treasury securities or whether it's going into high grade corporates or taxable municipal securities. That's why you see some more general diversification in the portfolio there of asset classes. So I expect that trend to continue as well. But that's the general strategy of what we're seeing and how we're how we're looking at the outlook here for the county's portfolio.
I like the municipals, but I'll bet now there's not going to be.
They're drying up a little bit.
Because everybody's got all this money.
Tons of municipalities
So you're
took,
gonna spend
well, and also the rates are going up. Municipalities were taking advantage of the extremely low rate environment and doing a lot of refunding in late 20 and throughout 21. And most of that's already done now. So we saw a lot of
Refunded as well.
we saw a lot of taxable issuance for these refundings, and we were big buyers of them. You know, whenever an underwriter was out there doing a refunding, they were coming to us saying, "Hey, do your municipalities have an issue or have an interest in buying some of these bonds?" And so we were buying them for the county and lots of our other clients around the state then.
Okay. Well, Bart, you're the chair, so I guess the media may have questions or.
I've got a question for, and it's not about our portfolio, but economics. I just want to make sure I understood this. I think I understood it before I got here, but we have 300,000 less jobs than we did 2 years ago.
Almost 3 million.
3 million,
Mhm.
3 million. But yet our economy is so great, according to some people, because we went from a 15% unemployment to 5% unemployment, but we still got 3 million jobs less.
And that's what I'm saying. You have a lesser number that you're dividing that by to figure out the unemployment rate. We are about 1.5 lower on the labor participation rate now. So that means 1.5% of the country just left the labor force for one reason or another. And so while that naturally helps the unemployment rate look better, my question is just, are we actually better as an economy when we lose that much production from the economy?
Obviously know the answer to that.
Right. Right.
You know, we ought to even think about going for oil. Maybe that would help.
Right.
It's you didn't make me feel good about the pending, and I know no, it's gonna go down, but we're not gonna have a crisis. I'm like, listen,
Don't sell your house. Okay.
well, I'm not selling that. Well, I mean, if there's ever time to sell, I mean, it's
Yeah, but you're making all kinds of equity in your house. It's fine.
I guess I'm just saying the portfolio outlook is going to be better because we're looking at higher interest rates. Whether the economy is actually better, I don't know. I mean, I think some of the struggling fundamentals in the economy that we were already starting to head potentially toward recession before COVID hit. I don't know if people remember, but the Fed already cut rates a couple times before COVID was even a thing because we were worried about growth at that time. And the fundamentals that were in place then, I don't think they changed. All we did was throw a bunch of money into the economy, and now we got to see.
Recession, COVID hit, a bunch of measures were taken in the short term, so there wasn't a complete dropout, and that just prolonged but potentially made it worse. You know, I see unprecedented inflation. I see a bunch of people borrowing on homes. I go to the grocery store. I mean, part of it is your eyes too, right? Shelves are empty and you're going, this doesn't feel right. And I'm not Janet Yellen. I'm not Alan Greenspan. I just see with my eyes and I see things that are scary.
And these are obviously bigger questions overall, but as far as what this means for the county, that's why I'm not saying bring everything short term because rates are going to start rising forever. I think while rates will go up, eventually they're going to hit a point, and this economy could hit another struggling point here before too long. And that's where you want to have some of these higher rates start to be locked in then.
I'm a lot more comfortable with your strategy than I am with the environment you're working out of.
Great.
Yeah. Well put.
We'll take that.
Art, you gonna let the media ask what you're meaning?
Land. Any questions?
Yeah, if we could just back up to the very beginning, I want to make sure I got the number right. Bart, you said your fourth quarter goal for investment income was 800,000 and you actually netted out about 751. Is that accurate?
That's correct.
Okay.
For the year.
Penalty for that is,
year.
Carl, we take them out back and kick them in the shed.
Okay, so that goal was for the year, not just the fourth quarter.
Correct.
Okay. Did you see a better fourth quarter in terms of a spike during that quarter as opposed to the first three?
Nothing right now is a spike. Everything is.
Oh, no, that's not true. You haven't seen my gas prices and the real estate taxes I just paid, Bart. Don't tell me there's not a spike.
Now, wait a minute. Your real estate taxes didn't spike.
The spike is forthcoming. Well,
The
we
spike's
saw
coming.
rates
Correct.
start to spike in the fourth quarter. There's a lag effect as to when they actually pay interest payments in the portfolio. So that'll start coming throughout this year. And the other spike that will happen is the short-term money market funds like Star Ohio, is as the Fed starts to raise short-term rates. Star Ohio is an investment portfolio. It's just a very short-term investment portfolio. So as short-term rates are rising, it will rise along with the Fed funds rate. So we'll see Star start to rise throughout this year, which will in turn mean the cash portion of the portfolio is going to start earning a lot more as well.
Well, Star Ohio, I think this morning was 0.17.
Yeah, 16 or 17 now, which was double where we were for 2 years.
Yeah.
Yeah.
Okay.
It's on the way up.
There's a spike.
No.
It doubled.
But
Whoa.
you will once the Fed actually.
We want the near 2 million back, Bart.
It's
I
coming.
do too.
Come on, let's go.
Want to lock it in as long as we can, and that's my only argument here.
750 stuff. I look at that, my little tracking spreadsheet, and I
The change in the cushion.
have vulgarities directed towards Bart under my breath as I'm looking at interest income.
You never had a bunny.
True.
Anybody else out there in TV land?
But if I could, Bart, I did not get an introduction at the beginning, so I'm not sure who the gentleman is with you.
This is Jim McCourt. He is with Meter
Investment
Management.
MEEDER.
The largest investment.
We are a public
House
funds investment manager. We work
in the
with
state.
about half the counties in the state of Ohio, over 300 public entities in the state of Ohio. So this is what we do. We manage public funds investment portfolios.
10 billion.
We have about 17 billion.
17 billion.
But they like Richland the best.
That's right.
Always have.
That's right.
Always will.
Okay, thank you.
Okie doke. Anything else out there?
McCourt, MCCOURT.
You got it.
Anybody else? Going.
That was,
Okay.
he's in a environment.
Oh, okay. So I need a motion to accept.
Second.
All in favor of the motion, say aye.
Aye.
Anybody opposed? Nobody's opposed.
No problem.
I guess we need unless there's anything else.
Anyone done as you could have said it.
Motion to adjourn.
Second.
All in favor of the motion, say aye.
Aye.
Boom. Thanks, guys.
Thank you, Jim.
Very much.
And-
See everyone.
Feel good though.
Where do
You
you,
have more investment income coming. You feel better.
Oh, it's got nowhere to go but up.
I also have money in the market. Yeah, I mean, all of us have like homes and money in the markets and retirements and
Sometimes a little bit of a crash isn't a bad thing, in real estate.
huh?
yeah, if you get in after the crash, right?
All right,
All right.
retire here in a
Just
few
average that
years.
cost down. Keep buying in.
I'd like to
Stay
go
steady.
to Florida and buy something. So.
All right. So 10:48, your Richland County Commissioners back in session. Now we're just going to adjourn at 10:48.
Jim, where are you from?
I live in Worthington, just north of Columbus.